I'm the fourth accountant, and today we're talking crypto. Now, first things first, and let's limit my liability. This content should not be construed as financial or investment advice. I am simply sharing my personal views and perspectives, which I hope will educate and inform and help give you the confidence to make your own financial decisions. If you need financial investment advice, please seek in-person advice from a qualified, experienced, and regulated finance professional. YouTube will not save you. Now, let's get into this. Crypto is a con, right? Well, there's plenty of content out there from creators who have a very pessimistic view, to say the least.
Is either a revolution for the internet and countless industries as we know it,
Like, in all seriousness, I compare it to the internet.
or the greatest Ponzi scheme in human history.
But listen, just because money is a bad investment, that doesn't mean you should start buying made-up internet money.
And they are not wrong. I'm a crypto advocate and have crypto holdings, but this has not always been the case. Well, because basically the initial use case was, as far as I was concerned, bullshit. What you may have noticed about crypto is that the use case seems to change or be completely retconned.
Gotcha, bitch!
There's a great video by James Janney which talks about this in more detail, which I highly recommend, and I've left a link below. I do not share his perspective, but I would accept the changing narrative about crypto and what it does not help the case for wider adoption. Equally, you should have a very, very, very skeptical view of anyone actively promoting any crypto investments. All forms of trading or investing are risky, and crypto is no different in this respect. The best thing to do is to educate yourself rather than blindly following the trading or investment strategies of other people or getting caught up in FOMO. Anyway, back to the topic at hand. When crypto first came to public attention, it was marketed as currency, but in my mind, the main issues were: how is minting digital currency different to printing money? Why the fuck would any unbacked currency be better than government-backed currency? Why would I prefer receiving or making payments using a highly volatile digital currency? Does anyone do business using digital currency? Why on earth is any of this worth the hassle of buying additional hardware and software to keep our digital currency secure? Well, we will revisit these issues later on, but at the time of recording, crypto has mainly been repositioned as a digital asset or a governance token. If you want to get a bit more of an understanding about what the fuck an asset is, check out my video in the link below. The concept of assets is central to the value proposition of many crypto projects. Now, whether a crypto token can be viewed as an asset is another fucking debate. However, this is when my own perspective started to shift. Crypto and money are simply not the same thing, even if we think about their use in a similar way. So what do I mean by this? Well, money can be viewed as a measure of relative wealth. The more you have of it compared to other people, the more you'll be able to outcompete them for assets, or on a more fundamental level, valued resources. However, this is only possible if 1, people accept money as legal tender, and 2, people believe money will grant them access to assets in the future. Government backing provides much of this confidence. Crypto is not money. More specifically, it is not necessarily a measure of relative wealth, and it does not have to be accepted by anyone or anything. Arguably, crypto tokens themselves can be viewed as having no intrinsic economic value whatsoever.
Fairy dust. It doesn't exist. It's never landed. It is no matter. It's not on the elemental chart. It's not fucking real. Right? All right?
However, perversely, some degenerates might argue that this is also the reason why crypto starts becoming more appealing conceptually and leads us onto 3 important and persuasive ideas. The first being consensus, the second being trustless or zero proof, and the third being permissionless. Historically, major monetary policy and financial systems have been determined and controlled by central authorities, whether this be the government or the banks. This system is often referred to as traditional finance or TradFi. Centralization is not a bad thing per se. It is one of the main reasons that money can be accepted and used with a high level of confidence in Western economies. But centralization also means there's a reliance on central records, which could be hacked, corrupted, or maliciously modified. Also, central authorities can collude to pursue their own interests to the detriment of everyone else. Also, individuals can be unfairly denied access to finance or even their own money. Crypto is by no means perfect, but the technology does offer the potential of an alternative decentralized financial framework known as DeFi, which for many, including myself, is highly compelling. If you want to understand why this is the case, there are a number of great channels out there explaining this. I'll leave links below. Now, if we revisit my initial problems with crypto could address them by granting voting or governance rights to all crypto holders over the token's economic model. This is known as tokenomics. Managing the supply of crypto in accordance with published, agreed, and publicly observable tokenomics. This means, for example, the total number of tokens in circulation could be quantified by anyone. Enabling permissionless and trustless commercial transactions, meaning people cannot simply decide not to stick to terms of an agreement after the fact. Removing the need for a central authority to approve what constitutes legal tender, meaning people do not have to accept hyperinflationary currencies as payment. And enabling users permissionless financial access, control, and autonomy over their assets. However, for most people I speak to, crypto simply has no relevance at all.
Don't need it.
Crypto projects will have to continue to encourage wider adoption, and I see my own crypto purchases as a way of supporting legitimate projects that could benefit everyone. The operative word here being could. As an aside, it is worth noting that at the time of recording, a number of institutions and companies are building large crypto holdings, but these were also the same people who bought up all the AAA rated subprime mortgage assets, and yeah, we know how that turned out.
9% today. The Xetra DAX over in Frankfurt is down by 9%. The Paris market down by 9%. Austria, which was briefly suspended earlier on in the day, is down by nearly 11%.
Cicero was right. We're in the last days of this country surviving.
Steve Lee, the Treasury runs the printing presses to print the dollars. Some of the dollars go into the Fed. Fed takes the dollars, buys Treasury bonds that the Treasury issues to raise money. Money goes back into the Fed. Isn't this all kind of one big Ponzi scheme?
The market is not functioning properly.
None of us really know why institutions are buying up crypto tokens, only the official reasons they choose to tell us. We also shouldn't go unnoticed that many governments are exploring digital versions of their own currencies. Printing money, as Elon keeps telling us, is not cheap. A digital version of a currency that can be pegged to other crypto tokens could actually give governments a better way of monitoring and taxing our wealth. This is something Edward Snowden has talked about, and I'll leave a link to the video below. So then, is crypto a con?
It was also a pyramid scheme.
Is it a fool's errand? Well, if you are being misled about the risks and opportunities, then yes it is. But remember, this is true of any financial opportunity. I would simply say that crypto is a useful technology with the potential to revolutionize and democratize the financial system and the web. Nothing more, nothing less. Let me be clear. Crypto can fuck up like every other new or developing technology. So, if you choose to speculate on the crypto market without reading the relevant white papers, understanding the personal tax implications, or educating yourself, well, you do so at your own risk. You have been warned.
Well, the reason why is that Bitcoin transactions are not private. All of you know this here on the general sense because it's 2024 and this is not, back in 2013 where we're saying, Bitcoin is perfectly anonymous and it's money for criminals and whatever. The only person who still believes that is Elizabeth Warren. The reality is that Bitcoin transactions are permanent, they are public, and they can be tracked and they can be linked. An enormous proportion of them are fully doxed, just not publicly doxed. And this is because how do people move in and off of sort of the Bitcoin network, any crypto chain really. And it's through the on and off ramps, right? Through these legacy exchanges that get licensed by all, whatever New York State or whatever country, whether it's in Dubai, whether it's in New York. And they are sharing the information en masse with what we politely refer to as regulators, but what are plainly described as great powers.